Hello and welcome back. I'm really looking forward to this session because it's about how central banks are progressing on this curve to continuous delivery, to automation. And also we're going to be touching, well, more than touching, on how central banks and supervisors are employing new technologies in automation, including natural language processing and AI, to help with supervision. So hopefully we're going to make that bridge between how central banks' adoption of new technologies is informing the way that they supervise banks. Adam, can I turn to you? I know Inflectra has, as I mentioned at the outset, you specialize in customers working in regulated markets. Where do you see central banks in general on the curve in terms of digital transition, and how do they compare with companies working in other regulated industries?
Oh, thank you, Matthew. It's a great question. And we, as a company at Inflectra, and I can speak for the companies, which makes it easier. Every industry has its nuances, and we work a lot in financial services, insurance. We also work with life sciences, medical devices, aerospace, defense, all very highly regulated industries, yet with different rules and regulations and different approaches to their automation, although some common tooling, which is interesting. But one of the things I was thinking is that, some of our clients are national banks, some are commercial banks, some are insurance companies, and some are insurance regulators. So, for example, the Hungarian National Bank and the Deutsche Bundesbank are two of our customers, an insurance regulator in India. Plus, we also have then commercial banks and insurance companies who are being regulated by these same organizations. And in some ways, the central banks themselves have their business systems. They have tons of stuff they have to automate and test internally, but they also want, in many cases, to prove out technologies. So when they make recommendations to the industry at large that they regulate, they have a proof of concept, they have test beds, things that they can use to have real world practical experience. And one of the things, actually a couple of things from hearing what Mark and Canary said were very interesting for me. One is that the concept of the third parties, right? As a central bank, you don't necessarily want to build a monolithic stack, even if it's the most appropriate for your own needs, because you really want to be able to demonstrate different technologies, different tooling, and different approaches that could be used by the member institutions. And so I'll pick on Eggplant. We have a test management platform, we have test automation tools, but we also integrate with Eggplant and other various competitive vendors because we know that our customers and their customers don't need a monolithic solution, they need an open platform. And I think that has to be the way of the future. When I started out doing, working at Inflectra in QA 15 years ago, there was a big vendor that had, load testing and functional testing and test management tool, which everyone used, and you all know what I'm talking about, I think. But that was it. You would literally use one for each. But now it's much more specialized. If you're doing very highly visual testing, there's some really great AI-based tools for that. If you're doing what Mark's doing, Eggplant's being used by many of our clients in defense, in financial services. It's got a lot of great functionality in certain areas, and then other tools are better for like mobile banking apps and stuff. So the days of monolithic automation are gone. So you need open platforms that work with other tools and across the competitive landscape of the vendor space. And the second challenge we're seeing with the central banks and highly regulated banks and other industries is a lot of the data privacy rules that started out with GDPR. We've also done a lot of work with healthcare, where HIPAA is the law of the land. But that's becoming, I think, commonplace in almost every industry. We're seeing a lot of our clients, for example, in India, there are data residency rules. Any transactional data can't leave India. And actually, it's interesting you mentioned Jira and Confluence, because since October last year, it's been gone crazy for us because we have a lot of financial service clients that are actually moving off Jira and Atlassian because of their phasing out the server product. And so a lot of the clients can't move to the cloud, same with some of our defense clients. And so they're really concerned. And we have some, migration paths, but also they want to, if they are hosting in the cloud, it has to be hosted in country, but without any talk back to a corporate directory service, identity management system. So even if you are in the cloud, how is the cloud structured? Where is the identity management being done? Is it done in country, out of country, replicated? There's so many fascinating aspects. I'm sure Bill's going to get into this more in the cyber side, which is definitely, more his bailiwick than mine. But it's fascinating, these different areas. And in terms of AI, which was mentioned, even in the UI automation space, for many years, we've been teaching humans to be machines. So if you use Selenium, right, as a tester, I test an app as a human, I can interact with it, I could use my human intuitive experience. But as an automation engineer, I'm being forced to act like a machine, coding, using XPath and CSS and all these browser tools, And yet that's not what humans do well. Machines do that well. So we should be having the machines do all of that nuts and bolts of automation, but have the user give the feedback, have the machine try and automate. And then it gives back feedback and says, did I find that button? Was it a false positive? And you can train it. So we're seeing that in automation. I think in 10 years, no one's going to be doing manual test automation in code. It's all going to be training machine models, and probably the same with like load testing and certainly security, pattern recognition. They're already in that direction. So it's just a fascinating space. But I do think one last thing is we should be looking across industries. I do feel like when we work with life science clients, they have a whole bunch of FDA rules. We work with financial service clients or aerospace clients. The rules are like 70% similar, 30% different for no good reason in many cases. And I think there's a lot of lessons that could be learned cross industry. And hopefully organizations like Bill's can maybe help with that.
Well, that's really interesting. Before we go to Bill, I'm going to ask you one sort of supplementary question about that, Adam. Because
Please.
I said at the outset, we've heard about change within central banks. We've heard about how central banks are adopting new technologies, particularly for supervision. How do you see one informing the others? Do you see a trend here, particularly in the context of, there's a move towards more prescriptive standards for operational resilience? This is something central banks and supervisors are working on right now, which includes software risk management. And some supervisors in some parts of the world, like the Singaporeans, have written guidelines on software testing. The Swiss and the Hong Kong regulators are seen to be more prescriptive than, for example, the Europeans and the Federal Reserve System, the Federal Reserve banks and the OCC. So do you see a trend toward central banks and learning from their own experience and applying those lessons to the way they supervise?
Right, and again, we're a commercial vendor, so I'm not speaking for any central bank. I'll make my own disclaimer. I think what we're seeing is that the idea is that in industries that are mission critical, and financial services is as mission critical in its own way as any other of the industries we work in, and in life sciences and in some of the mission systems that we work with, like the Lockheeds and Northrops of the world. Independent verification and validation and the rule-based testing and having to follow very prescriptive standards is the norm. Other industries, it's less so. I do feel like we're going to head towards that way, where there will be potentially the requirement for an independent analysis before something goes live. Before you migrate from one, say, banking account platform to another, where we've heard horror stories in the news. I'm not going to mention the banks, but we all know of them. Could that have been prevented by forcing a commercial bank to have an independent regulator or independent company report back to a regulator and say, well, this is their test plan, this is their risk management plan, here's what we've analyzed, these are what we're seeing, we think they shouldn't go live, versus the bank deciding, well, we'll take the risk, we're insured, we'll take the publicity hit, and making a business ROI decision. But then if the economy of the country is impacted, does the bank have the right to make that kind of decision? So too big to fail. Which is certainly medical devices, it's not allowed. You can't, as a medical device company, voluntarily decide that I'll take the risk of this hurting someone. But yet, in other industries, we don't always have that. So I do think that's going to happen. But on the other hand, you've got agile, CI/CD, increasing speed. So that's going to be the challenge for the age, is how do you balance compliance and speed? Because one is somewhat at the expense of the other, even with automation. And I think just getting that balance right is going to be where the regulators have to really...
And who's responsible for deciding which apps are critical and which are non-critical and could afford to fail sometimes?
That's a really great question. I don't have a singular answer. Probably, what data's in the app? What's the impact if it doesn't work? What's the backup strategy if it goes down? I'm sure you could define guidelines in the way that any industry can define the guidelines, but I'm sure there's going to be grey areas, commercial bank accounts.
We've got one question. We've got a minute left. So, Adam, I'm going to put it to you.
Okay.
And I'm reading it out. Can risk-based testing be coupled with machine learning? If yes, how can the data pool be managed to help run test suites across different domains? So,
the answer is definitely yes. If you're going to do risk-based testing, you're going to look at the trends in historical data that's in your historical testing patterns to find where the weaknesses are, where the gaps are, if you have 1,000 commits in one module, that module probably has risk of changes that could break things. And so I think applying risk techniques is going to require tons of data analysis so that a human isn't up all night doing tons and tons of data queries and trying to manually assess where risk is in a complex system. And I just want to also mention one last thing. Risk management has become a huge thing, which previously was done by a separate domain and a separate team. The agile teams, the requirements management, the project teams, they all have to embrace risk management. And one of the things we've seen with our Spiroplan platform has been the first time bringing together risk managers, project managers, requirements people, BAs, testers in a platform, which is groundbreaking because they all have their own separate requirements and their own worlds, like Mark has. Everyone has their own worlds. You can't do that anymore because that one risk that's in another team's board is going to suddenly come and bite you.
That's a great to stop. I'm afraid we've run out of time. We could carry on for another 40 minutes easily. Okay. I mean, thank you all so very much, and maybe we can come back and talk again another time. Thank you.
Very good. Thank you.
Bye bye.
Thank you very much.
Session on retail banking. Thank you.